Welcome to Trading Lounge, and today we're going to have a look at Australian banks. But before I do that, I want to have a look at one US bank, the largest bank, Bank of America, and then look at the Australian banking sector and some Australian banks to get a bit of an idea of where we are in all levels of global markets. So here we're on a weekly chart and it's displaying the GFC down into 2009, and our Australian banks, to put a bit of perspective on this, CBA, say our leading bank, has taken out its high up through here. So you can see that there's obviously some problems with global markets as such. It just hasn't risen. And also too, when we look at this particular trend coming up through here from this low here, we can see that it's on much lower volume here. Yeah, so we've got some divergence there. There's not a lot of buying coming into these banks as such. Okay, in terms of the wave count, I've labelled this as this first rally as a wave A, and then a wave B here, and then a wave C here. Now, the reason for that, I could have labelled it wave 3 here instead of wave C, but it's just not displaying a wave 3 personality. You know, a wave 3 moves very strongly, and this is more like a wave C, where it's lazier, it's on lower volume. If this was a wave 3 going up here, you know, as 1, back for 2, and up for 3, we'd be looking at higher volume as well. So we're not getting the volume, we're not getting the structure, well, we are technically getting the wave count, but a wave C and a third wave would have the same count anyway, but we're not getting the personality of a third wave as such. So we do have a very clean pattern here in terms of up for the A wave, an A and a B and a C for the B wave here, very much like the Australian markets and the UK markets, all pretty much the same. The structure here moving up through here, I think that we're actually at the top of the 5th wave here, because I've counted the intermediate wave 1 here in brackets, intermediate wave 2, and then we've got the 3rd wave, which is the longest and strongest, and you expect that in stocks rather than the 5th wave, and this is 90% of the time. Of course, you can have an extension in wave 1 or wave 5, but 90% of the time, roughly speaking, we'll have it in wave 3 here. So with intermediate wave 3, we've got 1 and 2 and 3 and 4, and then we've got wave 5 up through to here. And in minor wave 3 here, we've got 5 waves of minute degree in here as well. So it's really quite a nice fit, in terms of this 5 wave here completing. The extension in wave 3 leaves wave 1 and wave 5 roughly the same length. Yeah, in regards to the trading levels though, $20 would be the next major level, trading level 2, and 18 is a minor trading level, but we also call number 8 a profit-taking number as well, because it's number 8 is always the first even number before the next whole number, and if people are going to take part of their trade out of the market, that's the number they're going to do it at, generally speaking. The situation we've got here now, the move down through here is only in 3 waves so far, but a breaking of these lows here would give us a 5-wave structure. So if we do get this 5-wave structure down, making another low below $15 there, if we get 5 here, that means that we would get a counter trend in 3 waves. Here, pulling back up 50-60%. I think we could work with the medium level in here, which would be 1650. 15 is a medium level as well. There's 2 medium levels there. I won't go into the reason why that is just here now. And then if we get 5 there, that means we'll get another 5 over here. Okay, so if we get 5 here, then we'll get another 5. It's that simple, and that's where we are. So that's pretty much the banking sector, banking market really for the US. So I think it's at a point of weakness there. We need to keep an eye on that. So perhaps over the days and weeks ahead, now that we've been through this, we will monitor this little area through here and see what we've got here, because if we do get 5 here, it's really going to, you know, place a lot of weight to the downside. So here we're looking at CBA, and we're looking at it in the bigger picture here. Now, just to give you some sort of perspective, the GFC with this move here down into 2009, and when we had a look at the US banks, they had moved up off their lows, but only like 38, 40%, maybe 40 to 50% up off. No, not even that actually. But you know, only a very small way here, where our banking sector has got the same. This whole pattern here is the same pattern the US has made, but it's only moved up probably off its lows here, you know, 20 or 30% off its lows, where the Australian market has done this in an environment where the mining cycle has been to the downside, and being a commodity dollar, it does make you wonder. Now, what we're looking at here is that, this particular wave 4 here, and we're looking for wave 5 up through to here, up towards the 100 here. Now, in using the levels which I've got on here, you know, I just normally find that once a market, you know, here it's basically had its correction across the $50. It had its arrival, first high, its reaction, and then it settled into the $50 here eventually. So normally when that's the case, you know, you would start to look at the next major level. Well, there's 80, of course, but it basically 100, because 1 is the strongest number in the market, followed by 5. So, you know, this could be a $5 stock going to $10. So once you've established a nice big correction across a level like this trading level 5 here, then you'd always look towards the 100. And I remember all of this here, and I mentioned it at the time, and I've chatted about it since. Now, between 50 and 100, the next levels are 65, 72 and 80. Now, they've all played a part in this as well. The next level up here is 90, which is a medium level, because halfway between 100 and 80 here. The same as the 65 is between the 50 and the 80 here. So the wave count that we're looking up here, we're looking for a large wave 5 up here, but at the same time we've got 5 waves we're looking for. So primary wave 1 and 2 here, and a nice strong third wave at 4th and 5th. Now, normally to get the target of wave 3 here, we could use a Fibonacci tool here. So we would look at the length of wave 1 here, and then we would just move that over to here, to the bottom of wave 2 down here, and we would be looking for a 161, 162 extension, and quite often we would also get the doubling of wave 1, a 200% movement here as well. So these are the kind of levels that we're looking for. So the wave 3 here coming in around the 161 here at 100 is about right. And the other thing too is that when approaching a level in most cases, then it's normally the top of the third wave that hits the level, the fourth wave reacts to it, and then the fifth wave creates the first high above the level, which it did in this case here. So we had a third wave here, a fourth wave here, and a fifth wave here in 5 waves, and then the correction. So I think that's what's going to occur up there. So we can put a horizontal line there, an orange line there at 100 with a target point there. So I think what we could look at now is from intermediate wave 4 here. So intermediate wave 4, we're looking for 5 waves to the upside here to get to wave 3 there. So we'll be looking at, just bear with me a little bit, we'll be looking like this here. So So we'd be looking at wave 1 here, wave 2 to here, and then we're looking at 5 waves up for wave 3, which we can put here, and then wave 4 back into this space here, which will pull back 38.2% of the third wave. And I think this is really happening across the medium level here, the 90. So we can just bring that down here for the time being, roughly here somewhere. And then we can look for wave 5 of intermediate wave 5 to the upside here. So we'd be looking at 100 here and looking at this particular pattern here. And in wave 3 here, it does appear that we've got an extension in wave 3, in wave 5 here, because we've got a very clear 1, 2, 3, 4, and 5 up through to here. Okay, so we'd be looking at some sort of corrective pattern in this space here that could probably pull back to the first minor level of 88 here. So I've just labelled this here, put it on pause and labelled it here. So from wave 4 here, we've got wave 1, wave 2, and we've got wave 1, 2, 3, 4, and 5 here for wave 3, and back for wave 4 here, which will be this wave 4 here roughly, and then up for wave 5 to the upside there. Now wave 4s can get rather complicated, especially if wave 2 here was simple, then wave 4 could be complex. So we'll see how we go with that. The other interesting point here though is that when we're working with a medium level here, I'll just put that medium level on there properly. So that's the medium level in dark grey there. When working with a level like this, then we also work with the minor levels as well. So normally when we're looking for like the first high above the level here, then it can really occur within any space from, well, within group 1 here. So 91, 92 and 93 here. Now I find that sometimes it can go above 93 here, but it's the retest when it comes back down, it normally fails at this point, and then we get the correction. So when we're looking for the high of a particular wave structure, it can be anywhere within group 1, and very often, well not very often, it can pop above that, but when it folds back and fails to find support there. And the other point too is that the 88 here is the first minor level under this level here. So this is the range that we should expect this correction to be in. And of course the other way to view this as well is from wave 2 and wave 3 here. If we do have a top in play here at the moment, say at 92 there, then the 38.2 retracement level will come back just in at 87.15 here. So that's another little target to look for. And generally the other banking stocks are like this as well. What I mean by that is that a lot of the other banks, they have different corrective patterns that occurred in this part of the structure here, okay? But far as it comes to this structure here, they're all pretty much in tune with this. So that's why we're long in ANZ and NAB and WBC and this particular stock here. We just used the daily robo on it, daily robo 1 on it. But and AMP and the insurance companies, they're all sort of picking up and going in this particular direction. So yeah. All good for that point. Okay, thanks for tuning in. Cheers. Any questions, just email me.